October 10th, 2025. In the span of a single afternoon, $800 billion vanished from the crypto market. Bitcoin plunged 16%, Ethereum 12%, and more than 1.6 million traders were liquidated. But here's the part that doesn't add up. One wallet was already shorting Bitcoin to the second, 1 minute before President Trump posted his 100% tariff announcement. He made nearly $200 million while everyone else was wiped out. So the question is simple: who was he and what did he know? For weeks before the crash, leverage in crypto was spiraling out of control. Open interest hit a record high, $94 billion in outstanding bets. Basically a skyscraper built on borrowed money. Traders weren't just leveraged, they were cross-margined, meaning they were using the same collateral for multiple positions. It was a powder keg waiting to spark, and the spark came from Washington. At 10:57 a.m. Eastern, the first post lands. We are calculating a massive increase to tariffs on Chinese products. The market starts to wobble. Then, at 4:50 p.m., when Wall Street has already closed, but as you know, crypto never sleeps, Trump now posts again. Starting November 1st, we will impose a 100% tariff on China and export controls on critical software. Within seconds, Bitcoin falls off a cliff. Altcoin cratered up to 70%. Binance and Coinbase buckle under the load and their order books freeze. It's a full-blown flash crash. And now, here is where it turns from chaos to corruption. Blockchain investigators notice a wallet on Hyperliquid, address ending in 757F. So this wallet at 16:39 GMT on October 9th, a full day before Trump's tariff posts, the wallet deposits $80 million in USDC and starts opening huge Bitcoin shorts. Hours later, another $30 million appears and opens Ethereum shorts. Then, between 2047 and 2049 GMT, tens of millions more flow in. And literally 1 minute before Trump's post at 4:50 p.m, the final shorts fill. At 2050 GMT, Trump presses post. Prices implodes. 30 minutes later, those positions are closed. Profit roughly $190 million. Funded, executed, and exited with surgical precision. There is no way that this was luck. This account was opened less than 28 hours before the crash. No history, no gradual build-up, just a $80 million deposit and perfect timing. Other linked wallet mirrored the trade, same minute, same direction. Forensic analysts comparing Hyperliquid's loans with on-chain funding flows traced one deposit to an address previously interacting with Binance OTC desk wallets. So this had to be someone with advanced knowledge who placed those trades. And that knowledge could only come from inside the circle of policy or platform operations. While the insiders cleaned up, retail traders were obliterated. Over $19 billion in leverage positions were liquidated in 24 hours. This was the largest wipeout in crypto history, bigger than FTX or the COVID crash combined. One Ukrainian investor, Konstantin Galish, reportedly took his own life after losing tens of millions. Thousands of smaller traders woke up to zero balances, forced liquidations, and frozen exchanges. Meanwhile, whales and institutions quietly bought the dip. BlackRock's spot ETF added more than 21,000 Bitcoin during the chaos. If this feels familiar, it should. Back in 2018, during the first trade war, officials close to the administration sold millions in stock right before the tariff announcements. Pam Bondi, Trump's former Attorney General, White House counsel, even diplomats. Every time tariffs dropped, their portfolios magically dodged the fallout. Now, years later, the same pattern repeats, just digital, faster, and harder to trace. Insider privilege has moved on-chain. Crypto was supposed to be the escape from Wall Street corruption. Instead, it became a mirror. Same manipulation, but less oversight. Decentralized exchanges halted withdrawals mid-crisis. Algorithms liquidated ordinary users while insiders cashed out. A market where tweets move billions and wallets predict them to the second isn't free enterprise. It's a rigged casino, and the house always knows when the next card drops. But who knows, maybe this was the biggest coincidence in financial history. You know, Trump is already tweeting stuff like, "Big oopsie, had a bad moment. Don't worry about China." It's all just a big meme. In my opinion, the line between power and profit has completely vanished. An $800 billion crash shouldn't hinge on one man's social media post. And nobody should be able to front-run it down to the second. So, as the dust settles, remember, for every wallet that wins big, there are thousands who lose everything. And until accountability catches up, the next flash crash isn't a matter of if, it's a matter of when. Thank you all for watching.